Do you know what the number one way to reduce your tax bill is for 2022 and beyond? The number one way: be proactive. That's it. You might be saying, wait a second, where's the secret sauce? I was looking for some amazing deduction, some loophole, et cetera, et cetera, et cetera. Well, the truth is there's probably 1,700 kinds of different strategies that can be deployed on your behalf as a small business owner. There are probably, 70,000 plus pages to the tax code. But the number one way to address your tax bill for 2022 and beyond is to be proactive. Like right now, as we come up to a September 15th deadline for extensions for small business owners, right now is not the time to be cleaning up 2021, although that's important. Now is the time to plan, model, and optimize for 2022, 2023, and beyond. That's the number one thing you could do as a small business owner. Get organized and work with and work towards understanding what the rules are to reduce your tax bill. Because once you reduce your tax bill, what do? You lower your tax burden, but you increase your cash flow. You increase your cash flow for your ultimate bill for the entire year, but also on a quarterly basis. Wouldn't it be great to not have to make as large or substantial of a September 15th estimated tax payment? Wouldn't it be great to know before year end, what can I do in the last 4 months of the year to lower my bill for 2022 and beyond? So that's it. It's not super sophisticated, but actually the number one way to do this is to be diligent and to work with someone who truly knows your business, someone who's forward thinking. So there are a whole bunch of other ideas that we utilize all throughout our time in our firm to help business owners save on taxes. We look at deductions, we look at entity optimization, we look at retirement, we look at insurance, we look at things, yes, technical things like Section 199A and qualified business income deductions. We look at multi-entity considerations, we look at multiple owner considerations. We can go down the list time and time again, but the reality is you have to be forward looking. You have to know what your numbers were through July, for example, or even maybe through yesterday, revenues, expenses, and use that to project and to feel out what the next 4 months are going to be looking like and what the next 12 months are going to be looking at. That's the way you reduce your tax bill, being proactive. So I'm not even sure that I'm going to put a disclaimer on this, right? Normally I'd say, hey, this isn't specific advice for you, et cetera, et cetera, et cetera. If you're looking at this and you're looking to figure out, hey, how can I get better at running my business? How can I optimize my business? How can I reduce my tax bill? Be proactive. Get your accounting records, get your corroborating evidence, get your required substantiation. Look at your revenues. We're coming up on Labor Day weekend in the US, perhaps in the next 10 days or so. What's going on? Look at what's going to happen for the next 2 or 3 months to reduce your tax bill. But in order to do that, we have to have up-to-date info to figure out how we're performing so far this year. So, I get it. I get how the real world works. If you're that person scrambling right now, figuring out, oh my gosh, I filed an extension. I need to get my corporate return done. I need to get my LLC done. I need to get my partnership return done for last year, for 2021. I feel you. I get it. I understand it. I know what it's like being in the trenches as a CFO. However, what I also know as a CFO, the only way to improve your cash flow and reduce your tax bill is to be proactive. And that's it. It sounds really profound, but it's really not. Some of the simplest solutions are some of the biggest ones that can help you get a better life, get a better model for your business. So I hope that helps. If you found this useful, absolutely please like, subscribe, set the notification bell so you can hear more about the detailed technical content where we do talk about meals and entertainment, if there is any, vehicle deductions, retirement plans, cost segregation. I could go on and on and on. But the best way, again, even the latest Inflation Act, there's all kinds of R&D credit benefits if you're building a new product that's experimental in nature and you're a startup and your revenues are less than certain values and you're employing people. These are all great technical content issues where we can delve into when we set up a time to talk. But the reality is you got to be proactive, because if you're scrambling around and chasing your tail for last year, you're not going to be able to stay ahead of the curve. So talk to you soon. Tony Bruce, CPA, more than just an accountant.